Hey guys, Dogaholics. Thank you guys for being here today. Wanted to make an update, talk a little bit about tankers. We'll talk a little bit about what happened on Friday. I'll share some of my thoughts on that. Talk a little bit about scrapping. We'll talk about rates. We'll talk about some stories and if the thesis for oil tankers is still intact. Friday was a bit of a bad day if you were involved in the energy space. Crude oil was down $10 or about 13%. It was like the single biggest down day in oil, like pretty much, I don't know, in 30 years, something crazy like that. And so I saw that and I was like, wow, that's interesting. Kind of sucks because I have some energy investments and some tankers. But you know, I don't know. It's just anything can happen in the short term. So I got a message, I think, from somebody on Twitter, and they're basically saying, "Hey, how does this affect the investment case for oil tankers?" And so, I thought about it for a little bit, and I was like, I don't know. It doesn't really change anything. There's a coronavirus, there's a Delta virus, now there's an Omicron virus. There'll probably be another virus, but eventually, oil demand is gonna keep going, or it has been. It's gonna keep going up, and the supply of ships gets tighter and tighter in the oil space. So a lot can happen in the short term, and sentiment really drives that. In fact, you can see that a lot in rates in different segments. The how bullish or how bearish the owners of their vessels are can really actually affect rates for a short term. But in the long term, the fundamentals, the supply and demand really is the main thing that we're looking at for an investment case in shipping. And so we get to rates, and rates are finally beginning to improve. If you listen to some tanker executives talk about this, they point to this as evidence that we are finally getting out of the trough. And what it shows us is that there is a little bit more tightness in the tanker market, at least relative to before. I think this little pop here, by the way, was from when there was that Suez Canal blockage, I'd imagine. I don't know, remember for sure when that was. So if we extrapolate, we take that out, what we can see from this is that, yeah, it seems that rates are beginning to improve. We are in the seasonally strong earnings period now. Usually that begins by about Thanksgiving. So hopefully we would continue to see these rates continue to go up. However, if that flash crash sentiment has an impact on some of these rates, who knows? Anything can happen. So crude oil stocks, they still remain at low levels, at least for the countries that we have visibility into. The US oil inventories has trended up, but it is still very low on the 5-year range. And what you tend to see is that when these get to very low ranges, it tends to correlate to periods where there's restocking and there's more demand for seaborne transport of oil. We've also recently seen there's been a coordinated release by different countries releasing their strategic reserves. And I think that's led to a lot of bearish sentiment. I've also seen some conspiracy theories, I don't know if I should mention that, where the new virus in South Africa is, or at least the reaction to it is an attempt to kind of keep these oil prices low so that not to stifle the global recovery from the cerveza last year. But I don't know, that's pretty speculative. What we do know is that when these countries release their strategic reserves, eventually those reserves need to get filled again. And what you see a lot is when countries tend to do this thing, it can have some short run impacts, but in the long run, they fill them back up. And what happens a lot of times is they're filling them back up at a higher price. Now, scrap steel prices continue to remain very elevated. To me, I'm actually find this very surprising how high these scrap steel prices have been and continue to remain. It seems to be that a lot of that might have to do to how many segments in the shipping space have just been doing so well. So there's really demand for this scrapping tonnage. And what a lot of that demand has been filled by recently has been oil tankers. In a separate note, and this is from Hellenic Shipping News, shipbroker Allied Shipbroking added that tankers continue being the key stockpile for the ship recycling market, with more and more owners taking the option to offload their vintage units due to the persistence of uninspiring freight earnings. However, the anticipated market rebound in the segment could upset the pool of potential tonnage available for recycling in the coming weeks. This is what I kind of anticipated, is that I would have imagined that we would have seen muted or more muted scrapping relative to what we've seen earlier in the year because we are in the strong seasonal period. But we continue to see very high rates of scrapping, which I find very interesting. And so, since my last tanker update, we continue to see even more scrapping. There has been 1 VLCC, 4 Suezmaxes, 5 Aframaxes, and 4 Panamaxes scrapped. I find this very interesting that we are entering what should be the seasonally strong period and we still continue to see elevated rates of scrapping. By the way, this is about a week old, so there may have also been some additional scrapping taking place over this holiday week. I wanted to show you guys this chart, give you guys a little bit more color in terms of scrapping taking place. This year we have seen the most amount of vessels scrapped in the tanker space than we have in the last 10 or so years. In terms of the raw number of vessels. Now, a more important metric is, in my opinion, deadweight tonnage, and it is high and is accelerating, but it's not as high as we've seen in 2018. Now, these scrap cycles don't tend to take place over just a 1-year time span, and that's about how long we've been in this scrapping cycle. So if rates continue to stay muted this winter, we will see even higher levels of scrapping next year. There's also a lot of evidence to suggest that this deadweight tonnage might be muted because of the Iran trade that's taking place, or the illicit trade, and a lot of that is on really large vessels. There's a lot of evidence to suggest that this trade is actually now become saturated. There's too many vessels in this illicit trade, so even the earnings those guys are making may not be making a lot of sense. And if that's true, then you might expect a lot of these really horrible older tonnage to be scrapped in the next year or so. One thing we've seen recently is the spread between HSFO and VLSFO fuels has increased. So what this means is essentially that the pressure on older tonnage continues to remain high in terms of costs. So non-eco, non-scrubber equipped vessels, even though we've seen the prices of fuel overall go down, the price on these older tonnage still remains at very elevated rates. So we would think that there would be even more incentive for older tonnage to continue to be scrapped. Now, if we ever do get to a point where we see an undersupply of oil tankers, it seems to me that there's a lot of evidence to suggest that the tankers themselves will earn more money for longer periods of time. So this is a slide from EURN, and this is the order book to fleet ratio, continues to stay at very low levels relative to the overall fleet size. We do know that the average age of the entire fleet is getting up there. It's older. So in the next couple of years, we will continue to see lots of scrapping candidates. And meanwhile, we do know that oil demand continues to increase. But I think what I find the most interesting is that the yard times. So if you wanted to go out and purchase a new ship, it would take a year longer than it would have a year ago to get that vessel. And it seems to me that there's a lot of evidence to suggest that is going to be even more tighter in the next year or so, as the container ships and the bulkers and the LNG vessels are earning tremendous amounts of money. Those slots for other ship types get filled up. Now, what I find this is to be fascinating is that it seems that there's going to be a period, or there's likely a period where these shipyards earn a lot of money too. So I'm looking into this space, learn a little bit more about those, and think about an investment case on those, because it seems to me that a lot of this evidence and all of these different various shipping segments shows that there is the likelihood that there's an underinvestment in shipyards. So these guys have a lot of pricing power. And if they have a lot of pricing power, then it disincentivizes tankers even more to go out and purchase new ships. So a lot of dynamics here that suggest if we ever do get to a point when tankers are undersupplied, they will just be able to earn a lot of money for a long period of time. One of the things I've been hearing a lot about in the tanker space recently is about Iran, or speculations about Iran. Now, Iran is currently sanctioned. What that is supposed to do in theory is stop or not give them access to the world market, but it hasn't stopped Iran from exporting a lot of its oil. Instead, what they've been doing is exporting it through, I would guess you would say, more illicit, nefarious participants who have been delivering that stuff to different countries around the world. I've read some people on Twitter who speculate that it's as much as 100 or 150 VLCCs that have been involved in the trade, right? Now, if these sanctions get lifted and Iran joins the world market, and there's a lot of incentive for them to be able to do that, by the way, because when they are transporting oil through this illicit trade, they're doing so not at market prices for their oil. So they really do want to, they do not want to be sanctioned, even though they're doing their best to skirt those, right? But if those sanctions get lifted, a lot of these vessels that are delivering oil from Iran to various countries around the world are older tonnage, or the rust buckets, and a lot of them would not be able to rejoin legitimate trade, and there would be no market for these vessels. So if and when sanctions get lifted from Iran, there's a lot of more potential for even more scrapping of tonnage like we've seen over the last year or so. It can happen, especially in the short term, and especially when we're talking about sentiment. But I continue to remain optimistic about the tanker space. Tankers are one of the most volatile spaces out there. So if and when the market turns, they can turn dramatically and very quickly. And again, I think there's a lot of evidence to suggest that the market is tightening and things are slowly beginning to turn around. But hey, I guess that's it for this week. If you guys think I missed anything or you want to let me know about something, leave a comment below. And I'll see you guys soon.